Welcome to Tweener Madness, the high-stakes startup showdown where 8 promising companies go head-to-head for a $25,000 investment prize from the Triangle Tweener Fund. But before the competition kicks off, let's meet the people making the tough calls, the judges. In this special Meet the Judges episode, we're sitting down with the investors and industry leaders who will be asking the hard-hitting questions, evaluating the startups, and ultimately deciding who moves forward in this bracket-style competition. Each round, 3 judges will vote on which startups advance, leading up to the finals in early April, where one company will take home the top prize. From the judges, you'll hear about their backgrounds, what they look for in a winning startup, and maybe even get a little inside scoop on their decision-making process. So, if you're a founder looking for investment, an entrepreneur curious about what investors really want, or just someone who loves a good business battle, you are in the right place. Let's meet the judges. Here's your host, Scot Wingo.
Hey, joining me today, we have Nikin Shah from Front Porch. He has either volunteered or gotten forced by the other 2 partners to be on our illustrious selection committee for Tweener Madness. Nikin, thanks for joining us and thanks for doing this.
Yeah, thanks for having us, Scott.
Yeah, so you guys have a fun story. So walk us through the origin of Front Porch.
Yeah. So Front Porch, we started in 2020. Joe Mancini, Greg Bordes, and I all went to business school, so that's how we all know each other. We grew up in the Southeast. We have been here for many years and been investing, kind of angel investing. Having grown up in North Carolina, saw the opportunity to invest in startups, kept on hearing the same thing. There's a lack of capital. And so we saw a unique opportunity in 2018, 2019 to bring a more institutionalized kind of hybrid fund structure to investing in startups and both meeting the needs of investors as well as meeting the needs of startups and entrepreneurs. So Front Porch, we're a hybrid venture fund focused in the Southeast. Hybrid being we invest 50% of our capital into other venture funds across the region. And then the remaining 50%, we invest directly into startups in a non-lead position. But we always look for a lead investor into those companies. And for us, the Southeast is Washington, D.C., down to Florida, as west as Texas, not including Texas or anything against Texas. It's just, this is the region where we believe there's tons of opportunities for startup innovation, as well as for investors to make top quartile returns.
Got it. And you guys are on Fund 2. So Fund 1, I imagine, was kind of that 2020 kind of fund.
Correct. Yeah. So then, Fund 1, we did a pilot fund of $5 million, set out to raise $3 million, end up raising $5 million across 71 investors across the nation through our own network. Greg went in full-time into the business in 2021 to close up Fund 1 and to launch Fund 2, which was a $20 million vehicle. Started to raise that in end of 22, and we finished raising that in April 2024. And so we're actively deploying our second fund, and we're in current discussions to, go out with potentially our third fund in 25.
Nice. Congrats on that. People may not realize, but you did fundraising probably during the historically, hopefully in our lifetimes, worst time to raise funding. So if you can do that, you can do anything.
Folks always ask us, how did we do it? Again, it's a blend of, we're fortunate and grateful to have built many good relationships, both in the Triangle, in the region, as well as kind of from our broader networks outside of the region over the last 20 years. And then we also put our own capital, right? And so as starting a new fund, it's a lot of it's based on investment strategy and trust. And we're very grateful for our investors to put that trust in us to support the growth of entrepreneurs and startups across the region.
Yeah, very cool. And then you guys are always very supportive of startups and big part of the ecosystem, which we share a lot of DNA in that regard of, there's always a financial aspect to this, but if you don't kind of support the community, then what's the point?
No, 100%. Yeah.
So you're from the Triangle? I can't remember exactly where you're from.
Yeah, so I grew up in Cary, North Carolina.
Okay.
Been here since the 90s. My family moved down from Connecticut. That's where I was born, but grew up here in the Triangle, went to high school here, undergrad here, grad school here.
Yeah.
Yeah.
And you're a Dookie, right?
That's where I went to grad school.
Yeah. Okay.
I went to Carolina for undergrad, so bleed Carolina blue through and through.
Okay. Got it.
This past weekend was a tough game, but yeah.
Yeah. At least one of your teams wins. You probably don't consider it that way, but yeah. And then Joe he's from here too, but Greg is from somewhere else. Is that right?
Yeah.
Somewhere
So
else
Joe grew up in Virginia.
Virginia.
I forget if it's a 8th, 9th, or 10th generation Virginian. Went to UVA for undergrad, and then Greg grew up in Kentucky. Didn't go to school there, but he's a diehard University of Kentucky basketball fan, and went to NYU for undergrad.
Yep. So you guys will understand this whole March Madness theme we're going with for sure.
Yeah.
Not new to you guys. And the hybrid thing is really interesting. So, so for folks that don't realize, so you half of what you do is you're an investor in other funds, right? So, and they're also in the Southeast kind of window, and then the other half is in companies. Sometimes when firms do that, the companies have to be in the portfolio of the LPs they've invested in, of the other funds. Do you guys have that rule, or you have some independence where you can kind of go and invest in the companies individually?
Yeah. Great question. So on the fund side, in Fund 2, it's a portfolio of, 17, 18, up to 20 funds we're going to be investing in. These are kind of, in our opinion, based on the time frame and the vintage, category leading funds, predominantly in the seed. Will go up to Series A and a little bit of growth equity, but it's across tech, deep tech, healthcare, life sciences. And you are correct. So we're an institutional LP into those funds. And our goal and vision is hopefully we can be a major investor and anchor investor into many of these funds kind of in the future. We then leverage those relationships, but then many others, right? We sit in this unique position of both being a GP and an LP. And so we harvest those relationships to look at a bunch of our direct deal flow. And so for us in Fund 2, it's probably going to be close to 30 companies. On an annual basis, we're looking at thousands of companies and narrowing down. And, we've been averaging about 10 to 12 investments a year. To curate our full portfolio.
That's actually a lot, because your typical fund will do 3 or 4 a year. They'll do that in the life of the fund, right, over a 5-year invest period. So that's pretty we do it in a quarter, but for most folks that's like a pretty aggressive cycle that you're in. Yeah,
100%. And what we feel and have found thus far over the last 5 years is, we're sitting on a pretty curated set of deal flow where, many venture funds, they're looking at thousands of deals. They're picking 1 or 2 of those companies or 3 companies in a year. For Front Porch, we're seeing that, but across the many funds that we're invested in as well as we're friendly with. And so we're seeing this highly curated set of portfolio. And part of it is, look, venture is one of those industries you're investing 5 to 10 years out. There's a lot that can happen. Having been an operator in my prior life, and as you know, as an operator, right, there's many things that couldn't go wrong, both internally, externally, macroeconomically, et cetera, that you just don't know. And so that's kind of why we believe in, diversification and increasing the number of companies that we have exposure to.
I'm extremely biased, but I think that's a genius move. There's actually an article I need to send you that did some math on that you'll enjoy.
Yep.
You're more of a math person than I am. You'll understand it more than I did. It did Monte Carlo. It did Monte Carlo simulations, and I tap out at Monte Carlo simulations. Yep. It feels too MBA for me. So you guys have only been at it for and the sad thing about the weird thing about this venture, I think, concept is when it takes 10 years to kind of know if you're right. So some of these questions, maybe not be relevant. So sometimes I'll ask like your biggest win and that kind of thing. Have you guys had the opportunity to have any kind of big wins at this point, or still a little too early?
Yeah, I would say it's still too early. We've seen some positive movement. Many funds, the way they do their valuation, I would say they mark up based on either a third-party round or based on revenue growth. Much of our portfolio, we've been, a good number of companies we've invested over years, and so we see significant revenue growth in several companies. And then we've had a few exits, both our funds, they've had some portfolio companies that have exited, and then we've had an exit recently in our fund one with a local company, Biospatial.
Yeah,
it was a good. It was a good exit, and look, it's each one of these. We underwrite these companies to a minimum 10x on the direct side, and you hope for the best, and you support the entrepreneur, whether it's strategy, whether it's introductions to customers, whether it's finding a good talent, and so again, I would say from a big success, it's still too early, but there's many companies that we're very excited about.
If I'm a first-time founder, help me unpack that. We underwrite to 10x. Like, what's that mean?
Yeah. So what we mean is when we invest into a company, we look at the entry valuation. We look at kind of, we hope that by the time we exit the company, we will have returned 10 times the amount of money we've invested into that company. We understand, ideally, in the initial rounds of the company, we're going to continue to invest our pro rata share, so our given percentage, to maintain the percentage ownership in a company. And we may also invest beyond that if we're very excited about the company and its trajectory. With that said, we have a limited pool of capital, and so we're having to make decisions in terms of which company to continue to support. But then we also have the ability to spin up what's called special purpose vehicles, SPVs, to go beyond what the fund can invest in. But at the end of the day, we're looking at returning 10 times the amount of money that we invested, recognizing we're not going to receive 10 times the investment across our entire portfolio.
Yeah. So it's up to the founder to convince you that there's like a 10x opportunity as part of their pitch, right? And then you guys go do the work on the valuation. So if they've priced it at randomly 100 million, and you're like, well, there's no way someone's going to buy this for $1 billion in our time frame. That's so valuation matters, the size of the market, possible exits are all kind of an important factor as you think about this.
As well as dilution, right? Assuming we invest at 100 million, just using your example. Assuming we invest and there's no other money raised ever again in the history of that company, then yes, simple math, returning for them exiting at $1 billion, we would essentially have a 10x return.
Yeah.
But if there's subsequent rounds of funding and we don't participate, then we assume that exit needs to be much larger.
Yeah. Okay. Cool. And then when you guys do direct, you mentioned deep tech, and are there any categories you won't invest in? It seems like you have a pretty broad spectrum when you do.
Yeah, we have a pretty broad. I mean, I would say on the direct side, we won't do direct kind of therapeutics or biotech, just the amount of capital that's required. But we do have exposure to biotech through our fund partners. So firms like Hatteras in Fund One, KDT in Fund Two, are firms that we've continued to support and kind of like the work. So we like the exposure, but given our broad mandate on the direct side, we just cannot create a diversified enough portfolio. And our dollars in Fund Two, our average initial check is $200,000, whereas a biotech at that stage is raising $3, $5, $10 million minimum. And so for us, it just doesn't make sense.
Yeah, with a $200K check, I imagine you're focused on kind of that pre-seed, seed, kind of pretty early stage.
Pre-seed, seed. We've gone, in healthcare, broadly healthcare, I would say we're finding it hard to invest at the pre-seed and seed. There's a lot of stress in the healthcare industry, from my background, and so what we're investing in those companies a little bit later. Call it seed plus or early A.
Cool. You've probably seen, I don't know how many, but even though you've been at this kind of 5 years, you've probably seen hundreds, if not thousands of pitches. Any tips for some of our first time pitchers on, what to do and what not to do?
Yeah. One is, look, it's, it's showtime. And so I would just say have a lot of passion and in your pitch. Drink coffee if you need to drink coffee. Dress nicely, and so certainly first impressions matter a lot. And be excited about what you're pitching. But beyond that, I would say, I mean, we think about business building as, a company solving a key problem. So make it very clear in terms of what problem are you solving, and then make sure you're articulating why is your team the best team to be solving that problem, and why is this your life's work. If you can convey those two things, you'll likely get a second meeting.
Cool. Does it work with your firm where you kind of pitch one of you guys and then you guys have kind of a meet the whole team kind of a situation?
We do, yeah. So for Front Porch, if it's healthcare, I review all our healthcare deals. If it's tech, traditional tech or ad tech or sales and marketing type tech, Joe reviews those. If it's more data analytics or fintech or prop tech, then Greg reviews those initially. Once you have an initial pitch with one of us, if we like it, we'll typically we will request access to a data room to be able to dig in deeper. If that initial review seems positive, then we'll invite the founder or the executive team to pitch the remaining partners. And then we'll kind of go through additional diligence, and then we'll kind of get to a decision. And for us, all three of us, even though we have our specializations, for our decisions, all three of us have to say yes.
Got it. And if people want to learn more about Front Porch, go to frontporchvp.com. Also, you guys are pretty active on LinkedIn. So, follow Greg, Nikin, and Joe Mancini. Any last tips or things that you would share with founders that are entering the contest?
Yeah, no, I mean, again, we appreciate founders. Having been a business owner myself in the past, it is tough, and kudos for taking the plunge to starting something and building something. It can be very rewarding, whether it's a success or not. It's just that process of building a team and working towards solving a key problem is always fun. So keep up the good work.
Awesome. Thanks, Nikin, and appreciate you taking time to do not only the interview, but to be one of our selection committee members. It'll be a fun, probably a little messy in the studio, but we'll figure it out, and it's going to be a fun process.
Nope, we're excited. Thanks Scott and Tweener for hosting this challenge.
Absolutely. We'll see you live in the studio.
That's a wrap on this Meet the Judges episode. Now you know the minds behind the decisions, the investors and industry leaders who will be putting these startups to the test. As Tweener Madness kicks off, they'll be asking the tough questions, making the tough calls, and deciding who advances in the bracket, all leading up to the finals in early April. Make sure you're subscribed so you don't miss a single matchup. And if you want to follow along with all things Tweener Madness and the Triangle startup scene, head on over to tweenertimes.com. Also, if you're thinking about launching your own podcast or want to bring professional production to your brand, check out Earfluence.com. The competition is about to begin, and we'll see you soon in the next episode.